Hi, good morning, everybody. Today is Tuesday, May 30th, and this is a really special treat because in the last couple of days, or actually weeks rather, we've been talking about like when it comes to these, not just the group funds, like the QSI group funds and where all the XLM is going to, but more specifically, people have questions about, okay, if we do believe that the white hats are the white hats, and it's part of this Jussara wealth transfer, how does it actually work? What is the mechanism that allows the money to be transferred over to here? And so Nick had made this amazing post about SPACs, SPAC. And the information, I think, was so plainly put out there because it really helps to tie in like what all of us have pretty much known from a gut instinct standpoint, like what the theories are, what the possibility could be. But then Nick comes charging in here with actual financial terms that's been used by the industry for easily decades, but I don't know if it's been used for longer than that.
Yeah.
So with that being said, I thought that there would be no better person to actually explain the details of how this works, show you proof of how it works in like the normal 3D financial industry and how it ties into what we're doing here over in the Stellar ecosystem for specifically these ICOs. So without further ado, Nick, I'm just going to let you take it over. And if you can start with the definition of SPACs, and then
Yeah.
we'll go there.
If I could share my screen. Okay, let's see. Bear with me.
Okay, go ahead.
All right. Can you see that? All right. Okay. All right. So first, I want to thank the troll from the White Hat Army who came into the room, because if it wasn't for her, really probably wouldn't be having this call. She aggravated me enough to basically put out that post. So thank you.
See, trolls and Kazarians do serve a very positive purpose sometimes. It's great for
You can make lemonade out of lemons every once in a while.
Yeah.
So anyway, and this just a quick comment. Emily and I, after the call debunking the Khazarians, I mentioned to Emily that there's so much FUD out there and all these comments, all these different statements that mislead people. I said we really need to do a call on what people are really buying here and that they understand what the concept is behind all of these tokens. And then that post came, and lo and behold, here we are. So anyway, a SPAC is a special purpose acquisition company, and actually they came about in the mid 80s, believe it or not. It's when I first had been starting in my career that I noticed these investment vehicles. And with regards to the formal definition as defined by the SEC is, and I have it on the screen, a SPAC is a company with no operations that offers securities for cash and places substantially all the offering proceeds into a trust or escrow account for future use in the acquisition of one or more private operating companies. So, they would raise cash. They wouldn't specifically say this is a company as they would go public. They would say, we want to acquire this company or perform some type of a transaction, and we're raising $50 million. And they would, put out 10 million shares. They usually, back then, they were done at $5 a share. And it was, but you would say 10 million at $5 a share. Now, what I tried to do was really look at the tokens and say, what would be most descriptive of what they are. And it's actually not just the SPAC alone, but also we had talked about in the Federal Reserve call, the special purpose vehicles that the Federal Reserve and the Treasury were using. And I have that definition here as well. It's a special purpose vehicle. It's a subsidiary created by a parent to isolate financial risk. So I said, that applies as well, because, whatever we lose, the only thing we can lose really is what we put in. So it does isolate the financial risk as well. And if you notice under that definition as well, it says it can be used to undertake a risky venture while reducing any negative financial impact on the parent company. It also says it could be a holding company for securitization of debt. And also the last line, used by venture capitalists to consolidate a pool of capital to invest in a startup. So it's kind of like what we're doing, on all fronts. And So I came up with my own term that night in my post. It was the special purpose acquisition coin, with the same acronym as the SPAC. And because I was trying to really describe what because the comment was, about what are we buying and all the fun. So this is my own acronym for a tokenized security that combines all of these, plus the definition of a shell company, which a lot of people think is a criminal thing, but it's actually not. So combining all these factors, I felt was a good descriptive of what these tokens really represent. And if you notice here, it says a company may form under these special purpose vehicles. It may form the SPV as a limited partnership, a trust, a corporation, limited life. So there's a lot of different forms of these special purpose vehicles, and now we have a tokenized version of it essentially. And it says also that it can be designed for independent ownership, management, funding, help securitize assets, joint ventures, isolate corporate assets, perform other financial transactions. So I thought it was really a very, very almost perfect description of what the tokens are. And then the last sentence says, in venture capitalism, which we'll talk about, used by a group of investors to pool their assets in order to launch a new business or invest in a startup. So all these things sound like our tokens, right? So I'll move along. Bear with me a sec. Sorry, I gotta close out the screen. Okay, so these, as I mentioned, they were developed in the 1980s, and it was really actually not for large companies. It was for very small, privately owned companies that people wanted to acquire. But in order to bring them public, it took a lot of money. It also took a lot of effort and red tape. So the industry, of course, being the creative genius that it is, came up with a way to sidestep all the laws and to get things out quickly, so they didn't have to deal with the SEC. And as I mentioned earlier, they were roughly mostly between $20 and $50 million from what I remember, but it was quite a while ago. But in fact, recently, and Emily mentioned this with Namor, they've come back actually really strongly. And in the last couple of years, they've been doing billions and billions and billions of dollars of these offerings. And in 2021, $96 billion was raised in these SPACs. And just as an example, one of the most well-known was Virgin Galactic, which everybody knows is the space tourism company. So it's a less costly, quicker alternative to doing IPOs, and many people believe that it might even replace the IPO, believe it or not. So it's funny how I just happened to come up. I didn't know this actually when I did my post. It's funny how it just happened to come up with it, and now they've become very popular again. So it's a very widely used vehicle apparently now for many different transactions. And I heard recently somebody was talking about the description of the tokens on a show. I won't name the show, but nonetheless, they gave the description of the tokens as a shell company with the I guess they were implying that because it's a shell company, it's not worth anything, it's fake, it's worthless. Because in the past, many people have associated shell companies with criminal operations, where they would hide in, like in the movie Boiler Room and other Wall Street movies, they would hide, these illegal transactions in these shell companies, which represented really nothing. It was just a name only, essentially. But shell companies are actually legitimate. They're legal entities, and they don't. And this is one of the points I focused in on, was that they don't have any assets. They don't run businesses. There's no operations. It's essentially just a receptacle for something down the road. And they function as I mentioned, transactional vehicles and for many different purposes. It's interesting because when I was going through the definitions of shell corporations just to see what other uses they've had recently, you can see on the screen in the middle, it says they serve legitimate purposes such as to hold stock or intangible assets of another business entity, or to facilitate domestic and cross-border currency and asset transfers. That definitely sounds like the tokens that we're getting involved with, I think. So, the all of these investments, they have similar characteristics. They all limit risk. They all can hold different types of assets. They can all be used for various financial transactions. Most importantly, there's no underlying business currently, but in the future, that could possibly change depending on what the token is being used for. So, again, I coined the phrase special purpose acquisition coin. So why did I come up with this term to describe the tokens? As I mentioned, I felt it was the most similar description to use on these with all the characteristics. When you put them together, it's a perfect description of what we're bringing to you guys. And more importantly, the reason I did it was to dispel the narrative that the FUDers use. They like to say we're getting scammed because, Emily said this is McDonald's and this is not really McDonald's. Or, Emily said this is BlackRock, and we know BlackRock is a multi-gazillion-dollar company. These tokens are only, 0.01 XLM. They can't be that. So, the implication is that because we're using a name associated with the token, that's what it is. And that's misleading because that's not obviously what it is. We're using the name because it's related to a transaction in the future that's going to happen with that particular organization. All right. Otherwise, we'd have, 1,000 tokens with no names on them. We wouldn't know which token is being used for what purpose. So it's pretty straightforward that if we think that, McDonald's assets are going to get seized and put into these tokens, then we would call them McDonald's tokens. But they like to spin it around, and they like to kind of create doubt in people's minds by saying you're not getting what you're being told that it is. And we're not ever saying that that's what it is. Anybody who actually reads the post would know that they're being used for a totally different purpose. They're just being affiliated with a particular name. I also did it because, as I just mentioned, people talk about these as shell companies, and they imply that because it's a shell company that it's being used illegally or for criminal purposes, and also that they have no value. And while to a degree you would say it doesn't have value at the moment, its value comes in the future. It doesn't come at the moment that these are being issued. And that's why you don't end up having, in the case of a BlackRock, having to pay, $400 for each token like you would for a share of stock, because the transaction in the future is what's going to fund the value. So, and then also to clarify the understanding of what these tokens represent to us. Everybody kind of has a different thought in their mind as to what they are. They're companies. They're, they when they look at the values, they're looking at it as a trading vehicle. So there's all kinds of descriptions floating around in people's heads with regards to these tokens, and we really want to clarify. The way you get rid of the FUD is clarifying exactly what you're buying something for and what it is. So if you do that, none of the baloney that's out there that's being spread by a lot of these groups, you won't even pay attention to it, because you'll understand what it is you own and why you're buying it, and what the purpose is and what the potential outcomes are also. So that you want to focus in on, when you buy these, what can happen in the future. Okay, when you know that, just like when I used to do a trade in a stock, let's say, I would say, okay, I'm buying this, and I had my own algorithm for deciding what risk I would take and what my upside. So I would set it up, for example, as if the stock goes down 10%, then I'm selling it and I'm taking a small loss. Or if it goes up 40%, I'm selling half, and if it goes up another 10%, I'm selling the rest. So I would set up my parameters beforehand in order to put the trade on, so that I knew what my risk was when I went into the transaction and what my potential reward was. And what you always want to do, any successful trader or investor will set up an investment as whatever they lose, they will lose a small amount, and whatever they're gaining, they will gain multiples of that loss. So, for example, if, let's say, the example I just gave you, you lose 10%, but when it's up 40%, you sell half, and then up 50% the other half. You're making 4.5 times what you do on the upside when you win versus when you lose. So even if you lose like 3 out of 5 times, you still end up making money. And that we've talked about this this mentality in one of our other live streams as well, in the trading live stream. So you want to know why you're buying these tokens and what they're for and what the outcomes are. And well, I talked about the fact that this is the most similar description. Now I want to talk about the tokens themselves. As I said, they have names on them, but they're not operating businesses. They're not companies. They don't have assets. And I made a point to this in the post that I put out. There's no employees, no offices. They don't make money. They don't provide products and services. There's essentially a name there with a potential future transaction tied to it. And in the post, some of the white hat trolls were a little confused when I said, although it might share the name of a known entity, it has no direct relationship unless specified at its inception. That means that unless we say it when we're issuing out the token, this token represents 1/100th of a share of McDonald's, then the only thing it shares with McDonald's is really the name. There's no direct financial relationship with the token itself, as might be with other investments that come out that actually might represent a direct financial relationship with the company. So really, you're buying an intangible asset, and an intangible asset means it's something that's not. It's not a hard asset where you're buying real estate or you're buying a building or you're buying an existing business. You're buying something that can represent a significant amount in the future down the road based on certain things happening. So that's what we're essentially buying. And that's how you want to take this as you're buying these, that you're not buying McDonald's or Walmart or any of these other names. All of these are based on what we think is going to happen down the road in the future on based on the Q operation and all the other white hat operations associated with it. So, always bear that in mind when you're buying it. You're buying a future potential transaction. Okay, so this is a little bit more descriptive to dispel the narrative of that the funders use. And again, I kind of went over this from the standpoint of saying, they're constantly saying, look, these things are worthless that you bought, and you're losing money, and they're not really companies, they're shells, and the multitude of stuff out there is it's really hysterical when you think about it. They're not the companies they represent, and we call it my favorite one is we call the company up, and they said they never issued any tokens out to anybody, and these are not real. Yeah, the company's a total stranger calls the company up and asks them a question about a financial transaction representing something big in the future, and they're going to tell that person who they have no idea who that. Yeah, we issued out 2 million tokens, and those are our tokens. They're not going to tell you anything if you call up on the phone as a stranger. So when they put out these, look, we called all these companies, and they all said that there's no tokens. Of course they did. They're on NDAs. They're not going to tell a person who just calls up on the phone that's what they're doing. It's the most ridiculous argument I've ever heard. But again, you got to take it from the source. So, and in terms of they constantly are saying they're worthless, they're valueless. Yes, that's true. They are, in a technical standpoint, valueless when we buy them. Meaning they don't have like a really big tangible dollar value tied to them. That's why we end up paying 8/10,000ths of an XLM or whatever number we might be paying. If there was any value, you wouldn't be paying that. Okay, thankfully, we end up paying that. That's why they cost as little as they do. And that's why we're fortunate to be here at the beginning, because it's very similar to what venture capitalists do, which I'll discuss briefly in a little while. But that's the whole basis of why we're getting them at the prices that we are. If there was any value in them whatsoever, we would have to pay a lot more. We wouldn't be able to own nearly the amount and nearly the amount of tokens, as well as nearly the amount of different companies. So, and again, we talk about the tokens are not the companies. I think everybody understands that when they're buying these, that they're not. Some people get a little confused because they say, oh, I don't want to buy McDonald's, it's an evil corporation, or I don't want to buy Walmart because they do child trafficking. We're not buying those companies at all. We're setting up receptacles actually to take away from those companies what they gained illegally from doing criminal activity. So actually, it's the opposite. You should feel happy when you're buying a McDonald's token or a Walmart because we're taking back the evil money that they made based on all the things that they did. So, don't dispel that in your mind that because there's a name on it that it associates with something bad because the companies are bad. So, they're named again. They're named, and I want to emphasize this because people keep looking at the prices now and they say, well, I bought it at 0.01 XLM and now it's 0.0001 XLM and I lost money on it. You shouldn't be looking at this at all. You should be basically saying, I'm buying this, I'm putting it away in my lockbox, and I'm going to look at this after the flip and see what it's worth. That's how you should be really viewing this. If you're looking at, these white hat fudders like to talk about day trading and all these ridiculous strategies that you don't use on illiquid investments. Okay, you don't day trade illiquid investments. I don't know how they're doing it, but it would only be through manipulation of the prices that they're doing that you'd be able to do that, because otherwise you don't day trade an illiquid vehicle. So they're playing around with their bots and they're manipulating the prices to their benefit. And they talk about us taking money away from the people when actually they're, by doing that, taking money away from the people. They're taking it out of their pockets. The money doesn't come from nowhere. The manipulation that they're doing is coming out of the people's pockets and going into their pockets. So, it's hypocritical for them to point the finger and say, hey, you guys are scammers and stealing, when actually the reality is that they are doing that. So again, they have no dollar value to speak of when we're buying them. And even if they drop, what are you risking? 0.01 XLM is like 8 thousandths of a cent. I mean, so the only way you can really lose a lot of money is if you're not very smart and you put a whole bunch of money in these, knowing they're illiquid, knowing they're probably going to drop in value temporarily while we're waiting. Don't do it. It's very simple. Don't put a lot of money in. Only put in what you can afford to lose, as if you lost it all altogether, even though you haven't. And if you do that, there won't be any complaints about, oh, I lost 10,000, I lost 50,000. You shouldn't be putting that. You don't need to put that much money in these. With $1, you could buy 1 billion tokens. Why the hell would you want to put 10,000 or 50,000 or $100,000? Or like Brownie, I don't know what possessed them to put $600,000 into these. You got to be out of your mind. I mean, seriously. You don't need a lot of money to do it. You don't need a lot of tokens. All you need is one token to do fairly well, and that's it. You're set for life, and your family's set for life as well. So they're illiquid now. You're not gonna get these skyrocketing moves now. You're not gonna be able to get out of them probably if you want to try to get out. So bear in mind that when you go in, you're gonna have to sit with them for a while. Don't put a lot of money in them, and you'll be fine. Okay. And I talked about this, as I said, somebody on one of the other shows mentioned that they're shell companies and intimating that, shell companies are bad. They didn't do their homework in terms of shell companies because there are legitimate purposes for shell companies. They're legal. They actually do some fairly valuable transactions. They use for some fairly valuable transactions and important uses. And the good thing is with the shell corp, since it's not really a business, you can use it for many different, they have many different uses in terms of why you would set them up. The other thing is, like these tokens, they're able to be created with very, very minimal cost. So, we're not paying to set up, to get a lawyer, to set up a prospectus, to file with the SEC. And, Emily working with the developers, able to do it quickly and with very little cost, so they don't have to pass it along to us, which is really great because then we can, maximize our dollars in terms of the amount of tokens that we can buy. And they can also, as I mentioned, be used to represent something down the road. And typically you can't use a stock to do that. You can't use a bond to do it. You can't use the traditional securities because they represent a tangible asset now. So these are perfect because you're able to give them a variety of uses, but it doesn't have to be necessarily at the moment, nor does it have to represent anything particular at this moment. So, you can hold them also for, once you put your money in, there's no other additional money to carry them. Meaning, when let's say you buy a portfolio of different securities, there may be what's known as a cost of carry, meaning that money you have to constantly put out periodically in order to maintain your positions going forward. You don't have that here, which is again another major positive. Because once we put our money in, then that's it. We own them, and we don't have, if we want to add to them or do something else, that's fine. But otherwise, you don't have to really put any other money in. And also, these types of things can be used for new types of ventures like this, where we never had tokenized version of companies and potential digital stock market and digital currencies and digital precious metals. These are all new investments essentially, and now we have something that can be easily used to represent them going forward. So there's a lot of positives with these types of vehicles, and the reason we're drawing attention to it is that they've been used in the last couple of years, the SPACs, for a lot of transactions, but now for our purposes, this is going to help us bring in the new reality, the new financial system, the new stock market, and so on and so forth. So I want to go over clarifying what these tokens really represent, okay? Because I did this in a separate post from that as well. And what you're really doing is you're buying a calculated bet, okay? You're betting on something happening in the future that's going to pay off down the road if it goes the way you expect it. So we're buying a calculated bet on particular transactions related to certain companies. That's what the names are for, in certain industries, asset classes, and they're based on what we expect, hopefully in the near future, according to the white hat operations, that will actually result in giving us true value in the tokens going forward. And that could be from seized assets, it could be from money seized from the elites, spin-offs, divisions of these companies that exist now that they may want to keep and then, liquidate the rest. It could be from precious metals. I mean, there's a multitude of things that can happen in the near future that can give these tokens value. And the reason that I use the words calculated bet is that, when you make a bet, you're calculating the probability of winning versus losing. That's the first thing you're going to do as to whether or not you want to be involved. So it's not a bet like from the standpoint of going to the casino and putting money down on number 32 on the roulette wheel. It's more, you're looking at the possibilities of success and failure, and you weigh them out and you say, well, I have a much higher probability of success than failure, so that's something that I want to put my money down with and invest in. So, and I used an example of a bag of marbles because I think that believe it or not, that's how I actually learned about probabilities years ago. It was called a marble game, and we kind of had to like they gave us a certain amount of money and said, okay, you have to try to grow your money, to double without losing it all. And the interesting thing was they did this. It just reminded me, they did this with 30 PhDs. Really smart people, doctors, professional, all of them went bankrupt. Every single one of them went bankrupt because they didn't know how to use probability, in their favor. And when I used to speak to physicians and professionals and stuff as a financial advisor, they would always kind of have a little bit of an attitude because I'm a physician and I have a degree, and they think that because they're intelligent in one area that translates over to success in the financial area. And that's definitely not the case. Because as I said, 30 PhDs all went bankrupt on the marble game. Okay. So, the way that you are successful in this is knowing your probabilities and knowing when you should be putting money into something, when not to be putting it in, and when also to be taking it out, which people don't know how to do. But in this case, I was talking about you have 10 marbles, 5 black and 5 white. So when you're first starting out and you're going to be pulling marbles out of a bag, your odds are 50-50 because you have equal amounts of marbles. So then you reach in, you pull out a marble, and it's a black one. Now that leaves you 5 white ones, but only 4 black ones. So as you go forward, it's now 5 out of 9 instead of 5 out of 10. So your probability goes up slightly if you're looking to pull out a white one. to 55.5%. So then you reach in again and you pull out another black marble. So now you have, 3 black marbles and still 5 white marbles, and that takes your probability up, and it continues on. So the more black marbles you would pull out of the bag looking for white, the higher and higher your probability would go, until it would get to literally 100%. Because if you pulled out by chance 5 black marbles, then the next marble you're pulling out, no matter what, it's going to be a white one. So you want to look at your probabilities on something, and as you see things happening, you want to say to yourself, does that take away from my chance of success, or does that add to my chance of success? And when you have the odds well in your favor, that's when you want to pull the trigger. So now let's look at let's apply it to what we're doing with these tokens. Okay, so we're buying these tokens with the belief that the quantum financial system is coming into place. The white hats are taking the elites out of positions of power. We're destroying their slave debt mechanism, the Federal Reserve, and all the families that are involved with that are stealing money from us and also controlling the money that we can make. And there's a multitude of events over the course of the last couple of years that we've seen. So let's say we're looking at this and we say, should we invest in these or not? And we know what's supposed to happen because Emily Whip and other people have told us we should see this, we should see the Queen die, the Pope die, the CEO should leave, and the dollar should be replaced by gold-backed currency. So you have a list of events that you're looking at, and then as they happen, you kind of cross them off the list that you have with regards to getting to the end result. So now we see our tokens, we're thinking, should we buy them? All of a sudden, we see 2,000 CEOs resign, and that's part of the plan, to get rid of these CEOs, to take these corporations apart as we know them and turn them into, employee-owned businesses. So by that event happening now, your probability has just gone up slightly, because that was one of the events that we were expecting to happen in order to get to the final goal, which is the flip. Then you hear 26 countries announce they're going to switch to a gold-backed currency. That's another event that we expect to cross that one off the list and say, we're getting closer to the goal. Our chances of getting there are now higher. And then ISO 2022 is adopted by all the financial institutions all over the world. That's a big one. You say, wow, that's one of the main events that we expected. Our probability goes up somewhat more substantially than the others, because that's a very key step in order to be able to achieve what we're looking to achieve. So as you go through this list, you got your list, you're crossing them off. Now, when you've crossed off a good amount of them, you can say to yourself, you know what? There's only a few events left that have to happen in order for this to go. So I think I better, this is a good opportunity and good time for me to step in and now to start to commit some money, knowing that my risk is limited because of the cost of these things. And if things go the way that they do, then these are going to have substantial value. So to put it in, I equated it, to put it in marble terms, it's like there's still 5 white marbles in the bag, but there's only 2 black ones. So at that point, you know that your probability of success is over 71%. So that's how you always want to view any investments that you do. What's my risk? What's my reward? In this case, it's great because your risk is only what you put in. That's not usually how it works with stocks and other investments. You can lose not just all your money, but if you're on margin, you can lose even more than what you put in. Or if you're trading futures, you have to come up with money to satisfy the contract. So in this case, what you're putting down is at most what you can lose. But the upside is so much more larger than the downside. As we always say, if you had 92 billion of these tokens and they went to half of a penny, you're talking about multitudes of wealth that you couldn't even imagine. So from a risk reward standpoint, the way that this is being done is really smart from the standpoint of the developers and Emily and others involved. And also the nice thing is that most wealth creating investments and vehicles are only for the rich. Okay. And in this case, with $1, you can create generational wealth for your family and get yourself out of a position that you were in your whole life where you had nothing. So I think that that's a really it's a beautiful thing. It's a beautiful thing that the average person or the person who's really suffering has a chance here to change his life for the better in a substantial way with this tiny, tiny amount of money. Money you'd spend on a cup, not even a cup of coffee at Starbucks. Money that you would spend on, pennies, literally. So I that's one of the things that really attracted me to this, that they're doing it not for the wealthy, but for those who really need it. So, and I want to go over again why you're buying. We kind of went over why you're buying these, but also what are the possible outcomes, because we kind of get lost by looking at the charts every day. Oh, it's up it's up 1,000th of an XLM, it's down 2,000ths of an XLM, and you start looking at it as if you were looking at the Dow Jones on TV. And that's the wrong way to approach this, because then you're getting caught up in the short term and you're letting the greed factor kick in. And you might say, oh wow, it's up today to half an XLM, I got to get rid of this, when you might be doing that and cutting off billions of dollars to yourself down the road. So if you believe that the current White Hat operations, the Q operation, the quantum financial system, the asset-backed currencies, presidential orders, revaluation of currency and metals, old elimination of the stock market into the new, transfer of wealth, all these things. If you think any or all of these things are going to happen, then it's definitely worth putting a little bit of money into these, because if any one of those events happens, it's going to have a positive impact on the value of these tokens. And it doesn't take much at all, as I said, to really get involved. Just don't be stupid and put too much money, knowing you can't get it out, it's illiquid, and you have to wait a while. We don't know when exactly these things are going to happen, but we believe that they will happen. So just be smart. Don't get greedy. You don't need to buy $10,000 worth of tokens. I mean, all you need is $1, really, literally. We all get caught up in the group fund is coming, hurry up, hurry. You don't need to have thousands and thousands of tokens of each one that's coming out. So, don't get caught up, because that's kind of like the greed factor kicking in from the old mentality. We don't want to do that. Guarantee everybody who's listening to this call has multitudes more than enough tokens to create generational wealth. If they never did another group fund again or another ICO again, they would not even be a worry. So when you do these, don't get rushing and typing the wrong memos and I gotta hurry up and get in before and then you complain I have to make a donation, because take your time, think about it. Even if it passes and you don't get in, then there's another one coming. So, use your brains, think about why you're doing it, what you're doing, what you really want to commit, and what the possible end result will be. And again, I emphasize on the screen that the risk reward standpoint, you can't go back. I've never, actually, my whole life, I've never seen an investment vehicle that has this kind of risk reward. I mean, the reward to the risk it's astronomical. It's almost incalculable, because you're putting up 8,000ths of a penny to make potentially millions. I mean, there's nothing like that. Even options or any leverage types of securities, there's nothing that's probably the closest to it, but it's not even in the ballpark in terms of risk reward. And remember, now when you're buying these, you have two outcomes, okay? Either the coins become worthless because all the things that we are expecting to happen don't happen. So there's nothing that's going to come in and create value for these tokens, because the whole operation is a sham and nothing's going to happen, and Trump's never going to become president again, and the elites are going to stay in power. And I'm just mentioning that because we have to say that that's a possibility from the standpoint of probability. It could be 1 in a billion chance, but the reality is that we don't believe that. Otherwise, we wouldn't be doing this to begin with. But it is still possible that the coins could become worthless if events don't go as we think they can. So bear that in mind when you're putting the money in. If you're putting in, $100, be prepared to lose that $100. I don't believe that that's the case. I don't even think there's a remote chance of that, but you still have to acknowledge that that's a potential outcome. So, and I put this in capital letters here, do not invest more than you can afford to lose. Okay. And remember that these markets are illiquid. So whatever you're buying, you're probably not going to be able to get out of it in the near term until we see all of the liquidity flushed into the system from all these other sources that we're expecting from the bridges and seized assets and everything else. So until that happens, you know, some of them are more liquid than others, but when I say liquid, I mean like really liquid, like, you know, you go to the stock exchange and any moment in time you can sell a stock and you'll know what you're going to get for it, and that's it. In this case, it's not there. It's because we're a very small amount of people that's in this, and while that's a negative from the standpoint of liquidity, it's a really big positive for us because, you know, only 1,000 to 1/10,000, 1% of the world's population even knows about this. So consider it a blessing, even with the illiquidity, because, you know, most people don't even know that these things exist. So if we have to have a little inconvenience and illiquidity that we're locked in, it shouldn't really matter because this is something that can change your life and allow us to be able to change the lives of other people for the better. So, you know, always keep that in mind. Don't complain that, oh, I can't get out. I bought this and then it went down to, you know, 0.00001 instead of 0.01. It should be irrelevant. You should look at this as, I bought this, whatever it does right now, it does. I'll wait till after the flip and then look at them again and see what the values are at that point. Okay. And to kind of wrap it up, I view these, and for those of you who have never been involved with venture capital, I view these tokens as venture capital investments. And what venture capital is that people, it's kind of like, I think in Emily's mentioned the Shark Tank, where somebody comes on and they have a product or a service that they feel is unique, that's not really represented out there, and they go in front of a bunch of people with money, and they do their pitch in terms of why they think this product will do well, and why they think there's nothing out there that's comparable, and then the sharks basically say, "You have a horrible idea, get off the stage," or they say, "We'll give you some money and we'll back you." Okay, and that's what venture capital is. Usually, it's something, a new product, a new invention, a new way of performing services that are out there, something that improves upon what's already there. And people go out and they go to people that have capital that specifically are looking for these types of ideas. And they say, okay, you know, this is what I'm looking to do. But in the early stages, there's stages like stage 1, 2, 3, 4. In the early stage, the earliest stage, which is stage 1, the only thing usually that the inventor, the person who owns what the product is or the services is usually a business plan and a presentation. They don't usually have a finished product. Some of the people on Shark Tank do, but I'm talking about real venture capital where you're talking about a new technology invention or a new semiconductor that's going to revolutionize the industry. They might have a prototype, but most of the time they just have the plan and they describe it, and it usually is in depth. So people don't really have to see, you know, a prototype of a chip because it doesn't really do anything unless you put it into an application. So they usually don't have anything else. So if the people that are watching that have the money, these venture capitalists, if they believe what they're being told and they think that there's potential, then they will commit money to it. And if they don't, then they won't. Now, in venture capital, the expectation is that out of, let's say, however many you do, 95% of them are going to fail, meaning they're not going to amount to anything. They're going to be what we would call these tokens worthless. Okay. So when you're walking in the door, a venture capitalist knows that the majority of the money that he's laying down is not going to amount to anything. It's going to be basically worthless. Okay. But that other small 5% that succeeds makes up way, 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 way more for all of the money that you might have lost on the prior ventures that you were involved in. So, you know, when you hit one, it's gigantic money. And, you know, as we talk about in these tokens, if you have 5,000 tokens and 4,999 of them end up becoming worthless, but one of them goes to, you know, 1/2 of a penny. That's it. You not only have you made up all your losses, but you're going to have more money than you know what to be able to do with. Okay. And I like to use a poker analogy for those of you that play poker. where it costs you $10 every time to play a hand of poker. And when you're putting in the money, if the average pot when everybody goes in is, let's say, $500, you could play 99% of the hands and lose, and you win one hand and you're ahead of the game. So it's the same type of thing here. It only takes one to basically eliminate all of the money that you invested in all the others. And that's exactly what venture capital is. So when you're a venture capitalist, you say to yourself, you know what? The more projects I invest in, the more of a chance I'm going to have that one of them hits, even though it costs me more money on the short term. And for them, it costs them way, way more money than it's costing us to invest in these tokens. You're talking about millions, sometimes even billions of dollars. But they do it knowing they're smart. They say, if I have 1,000 venture capital, then it's more than likely that 50 of them are going to hit, and the other 950 are not going to hit. So 50 of them are going to make me a lot more money than 1 or 2 or 5. So that's how you want to view this. That the majority of them, and I'm not even saying that in this case 95% of them are going to fail. I don't think that's the case. But assume that even if most of them fail, or even almost all of them, all you need is one token to succeed. And, we have some good projects that have come out, and I certainly believe that more than one of them is going to succeed. But even if that was the case, you would be way, 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 way ahead of the game. So consider yourself a venture capitalist when you're doing this, okay? And say to yourself, I'm doing this with the intention that I know the majority of them may or may not amount to something, but nonetheless, all I need is one particular token to be able to succeed. Okay, so, and that'll create generational wealth for you, your family. It'll allow you to do humanitarian projects. So, those that are trying to dissuade us from getting in these, or trying to get us out of them, they don't want humanitarian work. They don't want us helping other people. They don't want us getting out of the difficult situations we are financially. So remember, when they're coming to you and saying, he's a fake, get rid of them, it's a scam, and they're not looking out for our best interests, okay? Because if they were, they know, what are we putting up? We're putting up 8/1000ths of a penny to buy something. You need to tell us that? And there's 177,000 tokens on Stellar. Why only Emily's and Whips and only our tokens are no good? I don't see them going after all these other tokens that are fake. You don't see them, don't buy this one, don't buy that one. It's only, Emily's putting out another token again. QSI is putting a token out. Bad. Whip's involved. And, I think all the people here realize, obviously, that these people are not looking out for our best interests, okay? Either they're looking to make money off of us by scaring us to sell out of these tokens so that they can buy them for dirt cheap, or they just don't want us to succeed and to move forward and change the world into a better place. So that pretty much wraps up my presentation on the SPACs. And Emily, you have any questions or anything you want me to address?
Yeah, I do. Let me do a quick screen share real quick.
Sure. Yeah, I see it.
I see it. Okay. So when I was doing my keyword search over in Telegram channel, hold on, let me get Telegram up to speed. So when I was doing my keyword search for SPACs, I actually noticed that we had put together 2 other posts back in 2022. And so one was about Circle doing a SPAC deal. One was about CoinCheck doing a SPAC deal. So, given everything that you have just educated us on, do you have any maybe words of wisdom to say what you think is going on with these?
Well, I mean, my understanding from what you've actually taught me, like in terms of Circle, I mean, these are critical pieces of the infrastructure in terms of being able to bridge money in and being able to, I guess, create the stable coins. So, I mean, these are parts of the machine that you need in order for the machine to run. So, I mean, doing it that way is ideal and smart on the developer's part, because if you had to do, let's say, an initial public offering or some type of securities offering, by the time you get it done, the flip will be over. Okay, so and also in terms of being able to allow most people to participate, this is a better way to go, because when you do public offering, for example, like a Facebook or an Apple or Google, I mean, it's usually a lot of money to get in, even just to get into one share of stock. So this doing it this way, it speeds up the process. It allows more of us who are not, the elites like Bill Gates and Warren Buffett, to be able to participate in these as well. And yeah, I mean the whole basis of it is inexpensive. It allows us to get in, and it circumvents a lot of the red tape that would stop you from bringing it out when. And these things have to come out like you're doing it now. We're doing these group offerings on a very timely basis, so we'll call it an expedited basis. If you had to do those in public offerings or some other vehicle, we probably would have had like one group offering. That would have been it, because it takes so long to get all these things out through the red tape that the industry has set up, that it's almost impossible. And that's why they do that. So yeah, I think that these are big names, especially Circle. Circle, I think, is a very important component, and I think that I didn't know they did a SPAC. Actually, it's very interesting. I think it's very smart on their part, because again, it allows rapidity of getting it out, and allows us to be able to be involved, and allows the company to raise the money quickly for what they need to do initially until they become a more mature, more developed company after the flip, and more money is and liquidity is into the system. So when that happens, we're not going to buy them at 8,000 of the penny. They could be 100 XLMs or or more. So yeah, I think that it was a very smart way, and a good way to bring it out quickly and get it done. And you can see like in the coin check, like you're pointing there, Thunderbridge Capital Partners, that's got to be a venture capital firm or a hedge fund or something along those lines that funded these SPACs. And that's usually who's behind a lot of these, because they're the ones that have the money, obviously. But yeah, no, I didn't know that. So I think that's very interesting. And it makes sense from the standpoint of what we're trying to do, and in the time frame that we're trying to do it.
Yeah. So, hey guys, you never know what you'll find when you keyword search, because these are from so long ago that I didn't even remember that we had these posts. I do want to share a couple other things as well, but before that, a couple more screen shares, but before that, there are a couple things, couple comments that I had when I was, listening to your presentation. I was taking some notes in the background. So just to reiterate, guys, as Nick has said multiple times over and over again, and let me just do, I guess, another screen share for the sake of the video. Okay, so I'm not going to do it on the Telegram side. That way we have less copy and pasting to do on the edit side. But this is the first slide of our big, Kazarian debunk / expose video last Wednesday. And it's just a reminder, guys, that Nick and I, Sinjin, a couple other people, we've been talking about illiquid markets in Stellar specifically for a very long time. So it's not just the fact that it's an illiquid market, but if you really have to understand the purpose of a decentralized exchange on top of that. And when you do, then everything starts to come together. So the only reason why people are they're freaking out, they're getting confused, they're getting upset because the money isn't there and I can't cash out for what I've put into it. It's the combination, guys, of illiquidity and decentralized market. And so the Kazarians know that, and they prey on your fear. And that's why they target words like pump and dump, words like drained liquidity. It's because they don't know that you can't go and do research on it, because those words don't actually exist in the Stellar ecosystem. So they're specifically using something that you can't even go and research and debunk them with, unless you know how decentralized exchanges work. So that's one thing I want to share really quickly.
People should go back. I'm sorry. People should watch these. You got to watch these videos, because it explains a lot of the baloney that they throw out there about pumping up. You got to understand what mechanism these are, so that you know what really is a pump and dump or not. Because if you don't, you're going to believe them. You think, oh yeah, it went up and then it went down. You got to understand that's why we did all of these videos, Emily and I, because you need to understand how these things work so that they don't trick you into believing it's something else that it's not.
Exactly. And so in those videos, we also talk about how the order books work, right? It's like if you have, when we've had so many posts about basic business, right? Supply and demand. During a group fund, which is when they have the ICO, we have a lot of demand. Everyone's buying into it. And afterwards, there's not really a lot of people who want to buy, post ICO. So there's very little demand. And so when people are, buying into it, they get the cash backs. The people who cash out of the cash backs first, usually like, I would say, well, definitely the first person, but maybe up to like the first, 3 to 5 people who cash out, they're the ones who are quote unquote draining the liquidity out of that asset, because when they sell, right, they're not putting sell orders, they're putting swap orders in, and they're going to basically eat up all of the buy orders that are on the DEX. And so if you look at the wallets, a lot of those people, I mean, there are some people who are doing it because they want to buy into a different ICO, but the vast majority of the ones who are doing it are the Khazarians who are attacking us, saying that these are false, and yet they're actually in here playing around in the group funds with us to make the cash back, to then crash the price of it and then say, here's another proof that there's no liquidity, that there's no valuation in this asset. So they're literally manipulating it behind the scenes, and the people who flood out are the ones who, believe in it for whatever reason.
Right, and they're doing that, and they're doing that, right? And then they're also everything that they tell us as to why these are scam tokens. The domains went away, and there's a scam warning on it, and they pump and dump, all those things that they're the ones doing it all. They put the scam warning on the tokens. They took down a bunch of domains. They went to Stellar and told them, to say, yeah, these scam warnings are valid. They're the ones that are selling first on the group fund. So they're doing it all, and they're trying to make it seem like it's naturally happening, and that the Stellar is saying that these are valid scams. They're doing it all. So the last people we want to listen to is them, because they're causing all of the problems and all of the fear and doubt in us who, if you don't know what you're doing, think that that's what's happening.
Yeah. So just to reiterate, the reason why I'm mentioning this again is because, earlier Nick was talking about the way to lose money. Well, the only way to lose money in this system is when you cash out. And that's why they want you to cash out. That's why they encourage everyone to swap out as soon as possible, right? Like they made all these mentions of, as soon as Emily finds out that we're doing this, she's going to take the money and run. And it's like, I've been here every single day for, since the inception. So I haven't gone anywhere, and I've known about their scheme for over a year now. They're the ones who are telling people to swap out, because again, when you swap out, you then sacrifice all of your tokens that you've been buying into for a fraction of the XLM. So in essence, you're the one who's losing money because you followed their direction, guys. So, buy and you hold, and you wait for liquidity to be injected into this, and then you'll be fine. And also, when Nick was putting his marble example together, I don't know if he was consciously doing this or not, but I thought that the visual of the example is so poignant, because we can also relay that into black hat versus white hat, not just black marble and white marble. And as you guys have seen, right, like in his little like blurb underneath the percentage example, he's talking about, well, you have the 2000 CEOs who stepped down, and then you have, this person who got arrested, and that, like everything that we're seeing on the news basically validates the fact that we've been saying for a long time the white hats are in control, right? So if you know the white hats are in control, and you're following the news, and you're seeing point after point after point of how the white hats are winning, and how all of those narratives of the WEF in control, or the black hats are still in control, and CBDCs are bad, and they're going to inject you with the mark of the beast. Guys, those are all false narratives, right? Yeah. So if you pay attention, you can then debunk all those false narratives and go, okay, here's another check mark, the white hats are in control. Here's another check mark that the white marbles have a much higher percentage than the black marbles. So I thought that was really, really brilliant of you. Even if you didn't know you're doing it, you're subconscious.
It was subconscious.
You're doing it. And then I also wanted to reiterate, so based on our Kazarian debunk video last week, we talked about liquidity injection. And so we had a couple different examples with Stellar VBRF and how, I was talking to Mr. Shuvalov in the background saying that, it kind of sounds like what you guys are doing is you're putting all these XLMs into those trusts, right? Like the trusts that are tied to the UCAs. And then I also showed another example of an asset that the BRICS nations team were putting up in. And what they had done is they had basically copy and pasted part of their agreement, but they did like the public version, obviously, of the agreement. So it doesn't have too many of the background details, but it talks about liquidity injection. And you guys probably remember that phrase from last year because, as an example, Project Guardian, right? Everyone was like, oh, they're going to inject, X number of hundreds of millions or billions, and eventually one day trillions into that. And they gave us a deadline. And all of a sudden we're like, well, it didn't reflect on the check, so where did it go? But okay, now we know. They injected it into the SPAC, which is the trust that Nick's been talking about this entire call. So they're doing things on the back end before it connects into the Stellar side of stuff. That way the liquidity is there, the money is there, and it's waiting for it to actually flow over.
Right, and they did it with SGB too. We found that we caught them when they were doing it with SGB. It was gone the next day. So
yes, exactly.
that was quadrillions.
Right. That's our Joe Biden moment. The millions, billions, trillions. And somebody made a comment in chat earlier this morning, right before this call started. And I don't remember exactly what that person said, but it was along the lines of, it can get really confusing because you have all these new people who are joining in the Stellar ecosystem and they're looking at what's happening. And if they're not, if they're not here to follow from start to finish, they'll probably get lost along the way. And I'm loosely interpreting that comment right now, guys. And the reason why I bring that up is because at the end of the day, it's not actually about the tenure of how long somebody's been in this ecosystem or how long they've been learning, right? It's all about your discernment. Some people have the ability to look at pattern recognition and they can discern, they can learn the lesson faster than people who've been in this space for, 5-10 years, right? And that's a massive difference between, I'll show a bigger example, right? So if we look at the microcosm of QSI members, most of us, not all, but if I have to estimate, I would probably say over 90% of us did not invest into Bitcoin and Ethereum, and we did not get involved with that kind of stuff, way back in the day. So most of us probably started investing into these ISO 20022 assets, possibly with the start of XRP, but obviously, definitely with the Stellar assets now. So why is that important? It's because, see, again, guys, it doesn't matter that we weren't there from the beginning to learn about where we are now. It really only matters your discernment and your ability to learn what's happening now to figure out what's all the crap back then. And let's see what else. Oh, I want to mention really quickly again. So illiquidity, scam assets, Nick mentioned this earlier on the call as well. This is going to become more and more important for people to understand, especially because we've been seeing that a lot of these, assets and domains that we previously thought were vetted or were good were on the second round of vetting, from like a couple of days ago and then through the next couple months, we're going to be flagging a lot more because what's happening is, Ralph, who's the head of SPIA, SPIA is a Stellar Project Integrity Audit, and they work with all the world's banks, governments, treasuries, and a lot more, right? Tons of major companies within major industries. So one of his big jobs is actually go and KYC AML the developers. And so a lot of these developers, maybe in the beginning, they pass the vetting, but what Ralph will do is every now and then, when something smells a little funny or he gets wind that there might be changes in management, he'll actually go back and he'll re-KYC the same company. And in doing so, if there are developers that are not able to be, let's say, if they're not able to pass the KYC process, then he basically tells Whiplash and myself, hey, put this on pause, guys, until, we have a vetted team behind it. We don't know what's going on. It could be like a coup. It could be some kind of hostile takeover, right? And so we want to make sure that we have the legitimate team behind these assets. And so that's what we're kind of seeing playing out live. That's also the reason why you guys probably remember a couple of months ago, we had a whole bunch of token swaps. Now, not every token swap attributed to a hostile takeover on a domain. Some of them were just changing and upgrading domains for security purposes, but part of them were actual assets minted by, a legitimate company again, but a rogue token developer who had to be fired and then be replaced and then re-KYC'd. And so many of you probably remember there was somebody who was even on the SPIA team himself who was posting all this stuff, right? Like you guys probably remember, they had done a giveaway. And in that giveaway, I think it was like 100 different wallets had won the XLM prize, or 50 wallets, I can't remember the number now. And then in hindsight, we found out that the wallets, 100% of all the wallets that won the XLM prize actually belonged to that rogue SPIA member. And so he had to get fired by his own agency that he was supposed to be, of the integrity audit patrol. And so he got fired. And then they launched a new giveaway afterwards, right? So it's like they have so much work to do. They have to be vigilant all the time, not just at the very beginning. And this has happened with some of the other assets as well. Qatar Invest, Jabal Ali, the Palm asset, you guys probably remember. So again, that's another example of how the original asset and domain and management team were legitimate. And then somewhere along the chain, there was some changes in management. So, we have all these, messages between Ralph, myself, Ralph Whip, where a lot of those representatives had to get fired, and they had to have new people come in place and take over that project. So that it did not, become a quote unquote scam project, right? And that's why a lot of them did end up having to do the token swap. So I'm just reminding you guys, because this is happening live again right now as we speak. And again, today is Tuesday, May 30th. We're seeing another round of this happening live time. And we're going to be seeing probably more and more of this happening. So SPIA is going to have a lot of work on their plates to go and re-KYC these various domains and the various teams. But as we're doing this, they're also doing it with me. I'm going to be part of this team to vet them. I'm also going to work with the BRICS team to help vet them as well. So we're basically joining forces to make sure that through all the different KYC channels, we can then verify and vet them all and not, not have any doubts or concerns in the future moving forward. But
Yeah,
as kind of, go ahead.
no, I want to add to what you're saying, because nobody likes having to send their tokens back and then swap them and wait for them to come back, but this is a necessary part of this operation, because this is a new operation. You constantly have people trying to infiltrate these organizations and to screw things up or to steal. So if they're if they're telling you to send back your tokens and they're going to reissue new tokens, it's for your benefit. It's for the benefit of the project, because this way you're now making sure it's a more secure project and you're getting rid of something that potentially could have derailed it. So as inconvenient as it might be, realize that they're doing it for our benefits, a lot more work for them, and it's for the benefit of the project so that it has the biggest chance to succeed. So, we all might grumble and say, oh, they changed domains and we have to send these. You know what? That means they caught somebody that could have ruined the whole thing. And thankfully they did. Otherwise, we probably have worthless token. So let's try not to grumble and mumble, because we're not doing the bulk of the work. All we have to do is send back the tokens. Emily and the teams, they have to do the bulk of the work, which I'm sure is a lot of work, to have to kind of repurpose everything and do it all over again. So bear that in mind, guys, with, in terms of comments and stuff.
Yeah, thank you, Nick, for that. But so just as a reminder, the reason why that, Stellar Cheesecake even exists to begin with is because the White Hats are completely aware of the situation. And they know that along the way, a lot of people will get very confused and they're going to cash out of the good assets. They're going to buy into the bad assets. And so they have this cheesecake system as almost like a catch-all to say, hey, guys, we're here to support your learning curve. And we know that there's been some shuffling along the way with the confusion and the uncertainty and the doubt, which is right, the FUD. Because of that, because of the negativity that the Khazarians have brought into the decks and have brought into all the channels and have basically infiltrated the channels and the decks, this is our solution to make sure that people still have some kind of safeguard, right, coming up soon. So again, like, cheesecake is an amazing thing. If you guys don't understand what cheesecake is, yes, it is one of my favorite desserts, period. But it's also a really amazing stellar tool. And we have tons and tons of posts on it. There will also be more information about cheesecake coming out probably in the next couple of months as well. So look for that to be kind of further refined in the future. And so we know, more of what we're getting ourselves involved into. Nick, I want to ask you a quick question. So when we talk about liquidity versus illiquidity in the stock market, right? That's kind of like the big comparison right now, stellar DEX versus stock market. And I know that this range varies widely, and you've already, briefly mentioned this in one of our previous calls, but for the sake of this call, can you give an example of a stock market, asset that is low liquidity in your opinion, like a range of what number, like what amount of money that does it look like for low liquidity versus high liquidity?
In the stock market?
Yeah.
Okay, well, I mean, high liquidity would be hundreds of billions of dollars, if not, I mean, there's only a few companies that $1 trillion market cap, but you would say hundreds of billions is like really, really, really liquid. And it's funny on the low end, because we've talked about the fact that there's such on the low end, you would say illiquidity, you would pick, say, a small cap or micro cap type of a stock that might have $100 million in it. And that's way, way, way more, in terms of one little tiny stock than you're seeing in terms of the liquidity in the Stellar system. So yeah, I mean, even on the low end of the stock market side, that would be really, 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 really liquid in the case of Stellar. So people have to bear that in mind, because it's just really, us, thousands of people, and many of us have duplicate wallets. And so you're not talking about anywhere near a fraction of the money that you will consider as liquidity in the stock market. So just to bear that in mind, that one little micro cap stock could have 10 times more the liquidity than this whole thing right now.
Yeah, absolutely. So
That's huge. That's huge, because that's liquidity is everything. That enables less manipulation of prices, enables you to get in and out of positions. So that's really, really important to bear in mind.
yeah. And then, just to kind of like give you guys some numbers, right? So when you look at these stellar assets that we're ICOing, not all, but the vast majority of them are capped at 1.2 million XLM, which means, roughly, right? Like depending on the price of the XLM, you're looking at roughly $120,000 USD, right? Which has, there's no comparison with these millions or billions that Nick's talking about. So that's why we call them super, super low liquidity or illiquid assets. And then on top of that, after the ICO is finished, then how much more liquidity do you have in there? A couple dollars, maybe like $100, right? So that's why the Khazarians know if anybody swaps out and they eat up all the buy orders on the order books, there's no liquidity in there. So again, guys, they're using this to manipulate people who don't take the time to learn about the DEX, so they can go and they can have their proofs, which are then just further debunked by Nick and myself and many other people.
Right, and also let me make one other comment, because this was talked about as well, in terms of they always say that Emily and Whip are taking liquidity out of the system, they're taking the XLMs and they're stealing. And when you do an initial public offering, the way it works, and I don't think I did a direct example. Emily showed an example in the debunking video of what goes on with the developers and the coins. You do an IPO, let's say of Facebook. Facebook says, okay, we're selling 100 million shares of Facebook at $10 a share. Okay, so what they do is they create the shares, they sell them through an investment bank or a selling group, and they sell them to the public. The public pays $10, and then that money goes to the company. Okay, it doesn't go in the market; it goes to the company itself as proceeds. The same thing happens here, where Emily does a group fund. We all put in our monies. We're buying the tokens either on, Emily sometimes will purchase them in the open market at the ICO price, or directly to the developer. She sends all the XLMs over there. They take the XLMs, they send back the tokens to us. They're not obligated to take those XLMs and put them back in here to provide liquidity. They're using that money for whatever purposes they might need to do it. So any other liquidity that comes about is really going to be from the people, and there's really nothing after we go in on the group fund. Nobody, unless somebody wants to add a little bit to their position because it dropped or whatever, there's no really further additional liquidity to be had. So to say that Emily's taking the liquidity out or Whip's then what are the developers getting if they're taking the liquidity? She can't take the XLMs and the developer take the XLMs. It's got to be one or the other. So the structure of these coin offerings is almost exactly like stocks, from the standpoint of they offer shares, you buy the shares, they get the money, you get the tokens. It's the same exact thing. So to make this whole ridiculous argument that Emily and Whip are taking money out of the system and all that stuff, it doesn't make any sense because the structure is exactly the same. But Emily's right. Once the initial buying is over, there's hardly any money there. So you got to know that before you go in, and you got to know that whatever price it might start at, more than likely the fudders and the Khazars are going to hit the whatever bids are there and try to crash it, as well as take some money out of the coin. So
Yeah, absolutely. So the last two things I want to share, the first one is, Nick made that Nick referenced Shark Tank again, right? Which is, used to be one of my favorite shows back when I still had time to watch a lot of TV. But a really big difference between this is, the producers of Shark Tank, they go and my assumption, guys, and I don't know how Shark Tank operates, but my assumption is they put out an RFP, and then people from all over the country, or sometimes the world, they'll go and they'll submit the proposals in there, and they'll say, my widget is so awesome because of X, Y, and Z. And then the executive team or like the selection committee will have to go and, do like whatever vetting they can do and then bring all these people on to right. And so the sharks are basically lifetime evaluating all of these different projects and saying what they want to invest in versus what they don't want to invest in. And so the only difference over here is white hats are not putting out a public RFP for the whole world to come in. What they're doing is they've already done the research behind the scenes and go, okay, out of the, 1,000 different energy companies or 1,000 different, construction companies out there, which are way more than 1,000, they're evaluating which one will have the most impact because at the same time, Nick and I have put together a lot of videos and a lot of posts as well, talking about how the only real way to really effectively and efficiently manage this wealth transfer is all these little companies, whether it banks, organizations, et cetera, they have to start getting consolidated, right? Because that way you have fewer moving pieces of the puzzle. And when you get all this kind of consolidation, then when eventually they do have that switch, they're only switching a handful of organizations as opposed to the millions of companies all over the world that still exist. And so they're doing a lot of pre-vetting in the background. And because these developers that I'm working with, they're tied very closely, again, guys, to the governments, to the treasury departments, to, big brand names, they are, they have the authority to do so because of who's granting them the authority, right? It's like, I'm going to take Russians as an example, whether it's the VBRF team or Stellar Russia or Tokens Foundation, right? Because Kirill is Russian Air Force. There's nothing that they're doing that President Putin doesn't know about. So like when they say that, we're making these kind of claims, then, well, yeah, it's with certain authority. So they're not like, rogue agents running around in the background like some of the other developers who are trying to establish themselves at this time. Nick, before I show my last couple screen shares, is there anything that you want to say as final words?
I wanted to add one thing that I forgot to mention during the presentation. There's always a comment that I hear about regarding these tokens that they're basically worthless. There's nothing behind them. There's nothing backing them. And I hear this constantly, even on the shows as well as the fudders. And if you look at Bitcoin, what's backing Bitcoin? There's nothing backing Bitcoin. There's nothing backing Ethereum. Okay, all the big coins that everybody's call legitimate, they have nothing backing them, just as little as our tokens. They have nothing extra backing them that our tokens have backing them. They have nothing. Just because they're established and people have accepted them in their minds as legitimate, to make the comment like there's nothing backing these tokens. There's nothing backing there's nothing backing the dollar. There's nothing backing any fiat currencies or tokens or anything else, unless it's specifically stated that there's some type of asset tied directly to it. So to say that Bitcoin's legitimate because it's $60,000, $30,000, and these tokens are worth it, there's nothing backing them. There's nothing backing any of them. So to make that comment is a ridiculous comment because right now everything is what we would call fiat. There's nothing there tangibly right now that there will be, but there's nothing there right now tangibly backing even the coins that they say are legitimate. So I wanted to just make that point because I heard a few people on the show saying there's nothing backing it. there's nothing backing anything. So just be aware of that.
Yeah. Thank you, Nick. So I guess for my final comments, I'm going to share a couple different screen shares. So give me a second. Let me merge it over into Telegram. Okay. So the first thing I want to show you is so I think most people know that behind the scenes, I've been helping some of the developers with the ICO posts, not all, but some of them. And for the VBRF team, I've been helping somebody named Greg, who's on the VBRF team itself. Greg and I have been facilitating the actual ICO posts, writing them, editing them, etc. And so when we were doing the Nomura one, which is the big Japanese bank that we ICO'd a couple of days ago, I was doing all this research into it. And I got super excited because, as you guys probably remember from the ICO post, Nomura is doing a SPAC with these electric vehicle companies. And so this was just like, maybe a day or two after Nick made his post about the SPACs. And I was like, oh my gosh, now that acronym is so fresh in my mind, I got super excited. And I said, but before we put this into the ICO, I want to make sure that I'm not doing this blindly, right? Like I want to make sure that I have their authorization, their approval to even put this kind of information in there, just in case it's not actually what they intended. So I sent the ICO write-up over to Greg and to Mr. Shuvalov, and I said, this is what I would like to include into it. And I very specifically highlighted, I said, Greg, please review this link. I want to make sure I understand this correctly, but because I would like to include it into the write-up. And the link that I sent him, as you guys can see on the screen, is exactly the message that Nick had made about SPACs and how he very cleverly changed the C from company into coin. And so after Greg reviewed it, he said, you understood it properly, which means Nick understood that properly, which is amazing.
Oh, that's nice to hear.
Yeah. So
Is it funny how that happened to come out? I happened to post that just before this offering came out that's doing a SPAC. There's no coincidences. The universe works to put things together. And it wasn't quite a SPAC, but I just used it as the closest analogy. But yeah, so
yeah.
That's nice to hear.
Yes. And so I'm just putting this one back up on the screen as a reminder of the actual Nomura ICO post. And so we want to make sure that, Nick did a beautiful job presenting the concept of a SPAC, both the company SPAC and the coin SPAC. And so we want to honor him in his work by including into the ICO to help people understand and learn more quickly what the developers are doing. So just wanting to put that in there. And then the last thing I'm going to share is just this message that I had with Mr. Shuvalov a couple minutes ago, because he's been messaging me in the background about the next ICO that they're preparing to do shortly. And I was like, oh, by the way, Nick and I are doing call on SPACs right now and how they're being used for the ICOs. And so he hearted it. So obviously, Mr. Shuvalov approves of what we're educating people on right now as well. So I thought that would be the perfect way to end this call, just to let everybody know that before I mentioned this at the very beginning of the call, before we were all theorizing on how some of this wealth transfer would happen and how they would be able to inject that money into the Stellar ecosystem. And then Nick came out with this, brilliant explanation of how SPACs work in the normal financial industry. And now we're getting confirmation directly from the Stellar VBRF team, both Greg and Mr. Shuvalov, that he has hit the nail on the head. So very, very well done, Nick. Super proud of you and how you've been able
That happens every once in a while. I do it. Thank you.
So hope everybody enjoyed this call, and we're going to go ahead and close it out, and I'll post the recording shortly. Thanks everybody for coming to join us. Take care.
Thank you, everybody. Bye-bye.